Good morning, everyone, and welcome to the European crossover webinar. And we've got a PMI data that's been coming out over the last hour or so, and we just got the Eurozone market services final PMI came in at 51.9 versus 51.5, which is a Reuters poll. A bit better than the prior. German services PMI came in at 51.7, better than prior months at 51.3. With French coming in at 52.2 versus prior 52.9. Overall, steady to better. The fly in the ointment was Italian PMIs came in a little bit weaker.
So the 2020 GDP growth is in 0.6% in line with the government. It does cut the 2019 average.
Let me turn down this. The squawk. Now we have gone and seen the cable going to make a nice, continued move here. Let's go and push it. Getting past that pivot at 29.80, and we're finally able to do it. We've come close so many times. You can see that, and gone over this umpteen time, but you can see the significance of the 29.80 pivot that's been in place for some time. That pivot has been in place for a year and a half, I believe it is. Actually, even longer than that, actually. But you can see the significance of 29.80 and how important it's been. So we bumped our heads up against it on 3 different occasions, 1, 2, 3, and then this 4th time we're able to get beyond that. And we've gone and pushed further. And at this point, we've actually made it up to our initial resistance level, which is 30.50. We actually have moved, looking for this market to move higher. We'll get to that in the analysis. But our initial resistance beyond that was going to be 30.50. And you can see that we're right there. We've actually gotten a little bit above beyond that. And dollar yen continues to remain a little bit on the weak side here. Not too far from, what we're looking at. We'll take a quick look on the daily moment. When we got above that pivot, which was 927, in the analysis we did from over the weekend, we said if we get a daily close below 927, which we did on Monday, the immediate target would be 951, which we got to there yesterday. We was actually sitting at 947. So we kind of held in that area here. We'll get into what we're looking for beyond that. And looking at some other markets. Did see a quick dip in here with the SPOOs. I'm not sure what actually prompted that. There we go. You see that? See a quick dip. We actually had a recovery late yesterday, and then we saw this quick dip into 30.82, and we've seen a bounce, a bit of a bounce back up. We're now actually at 39.2, so we're 10 full handles off the low. 30.82 was actually a key area. And we've actually, like I said, even pushed even higher at this point. We saw bonds rebound back, 30-year bonds up to 60, looked like 60.12 before dipping down now at 60.02. So seeing these SPOOs come back. I'm not sure what prompted that downward fall, because we lost essentially 12 handles rather quickly, and then we've come back and recovered most of that. With that, we're going to jump into the news. So the Australian dollar falters as a downbeat GDP fuels rate cuts bets. The Australian dollar slipped from 3-week highs on Wednesday after disappointing domestic data underlined expectations for additional rate cuts and offset some more upbeat economic news from China. The Aussie eased back to 68.35 from an overnight top of 68.62. though it still held gains of 1.1% for the week. The New Zealand dollar had no such problems and held firm at 65.12. Sentiment was supported by a private survey showing activity in China's giant service sector picked up to a 7-month high in November. Restraining the Aussie were figures showing the economy grew at a subpar 0.4 in the third quarter, missing forecasts and down from 0.6 in the previous quarter. That was unwelcome news for the RBA, which had hoped for growth of 0.7 to support its argument that the economy had reached a turning point. It also challenged the government's insistence that tax rebates launched in July would be enough on their own to get consumer spending again. Instead, households chose to save money, and consumption grew at the slowest pace since the global financial crisis. They've also used the RBA's three rate cuts since June to pay down debt faster and build equity in their homes. As long as the forthcoming Labor Department data doesn't change the picture, then we'll be looking to reduce our rate outlook to 25% or 0.25% by the end of 2Q20, and most likely scaling back our odd forecast too. Well, while the RBA is on hold until its next meeting in February, markets are wagering it will be forced to cut rates a quarter point to 0.5% by May at the latest. Investors also narrowed the odds on a further down, move down to 0.25%, in part because the latest flare-up in Sino-US trade tensions is threatening a fledgling recovery in global manufacturing. And let's go on in. Well, we just saw the SPOOs just rip up to 30.97. I don't know what hit the thing. China moves closer to trade deal, and SPOOs just ripped.
So US-China moved closer to trade deal despite heated rhetoric coming through on a headline.
Wow, that was quick. So China and US moves closer to deal despite rhetoric, and now I know we have some resistance at 31.01. Let's take a look real quickly. You can see here in the SPOOs, we're up to 31.03. Next key level, 31.04 and 31.09.
Sources to get the story. Apparently, negotiations are getting closer on amount of tariff relief. Apparently, yesterday, the president's comments were not indicative of talks falling apart. Again, from more people.
Well, with 31.07, 31.08, we know 31.09 is key.
People who asked to be identified said that US President Donald Trump's comments yesterday downplaying the urgency of a deal shouldn't be understood. Shouldn't be understood to mean the talks are stalling, as he was speaking off the cuff. Recent US legislation seeking to sanction Chinese officials over human rights issues in Hong Kong and Xinjiang are unlikely to impact the talks, says a person familiar with the Beijing thinking.
Okay, so like I said, we just saw that rip up. I mentioned about 31.09, but once again, I'm not sure how far this way was going to push it, but the key level up there was 31.09. We made it up to 31.08. It looks like what, about 31.08 and a quarter, and then we've dipped back.
There looks to be some sort of conclusion to phase one ahead of the December 15th.
Expecting a conclusion of phase one ahead of the December 15th.
This is not official, though. The USTR office didn't respond to requests.
So this is not official.
For talks, for confirmation.
Okay. Well, we made a run up there that 31.08. Probably we'll be looking at around 31.04 on this up move here. Nothing official at the point. I think any rally back up might. If we can get around 31.04-ish, that will probably go on and allow this market to go on and pair back a little bit. You can see here, we came up here, we're kind of easing back just a bit. Yeah, I just see one guy got stopped out on the niche on the euro. See, I was concerned over here at that 31.09, but once again, I didn't know how far this sucker was going to run. I knew we were looking at 31.01, then 109. We did actually make it up here. Hang on a moment. We made it up to 3108.5, so that's pretty close. Right now, the next key level is going to be 3105-ish, around there. But boy, did they run them pretty good. And I wasn't interested in getting run over, but so there's a big headline right there. We're going to move into, tell you what, we'll keep this open right here. Well, we're going to be, I'll tell you what, I'll keep this open and I'll just cover the news on that real quickly. On the dollar firms above 1 month lows on trade tensions. The dollar held firm of 1 month against its rivals on Wednesday as uncertainty about progress of trade talks between the U.S. and China fueled demand for the greenback. The dollar came under pressure this week and had some decent Eurozone data and surprisingly strong China survey figures. President Trump's statement that no deadline for an agreement with China hurt sentiment as global trade frictions have been already weakened world growth.
During the Asia session, we did hear from Reuters sources that said several sources they'd spoken to familiar with the Beijing stance said the escalation of tensions triggered by the Xinjiang bill could jeopardize the so-called Phase 1 deal already fraught with disagreements and complications. One of the sources earlier today said a Chinese government official who declined to be identified said it takes a very long time for Washington and Beijing to reach a deal. They cannot find a way to strike a deal while the iron is hot.
Well, we'll find out what happens. Like I said, market analysts said the dollar could only weaken substantially if the U.S. economic data showed a sharp declaration of expectations of rate cuts grew sharply. So,
Reuters picking up on a Bloomberg reported tweet saying that U.S. trying to move closer to trade deal despite heated rhetoric.
So they are moving. That's what they're saying. So Reuters is now saying the same thing. We're going to go and move into our analysis. There's no sense spending any further time on any of these other stories. We can see here cable. So let's go and move into the analysis while we keep an eye on things. Obviously a very fluid situation, so bear with us. So looking here with the euro dollar, so you can see we held steady overnight with the euro dollar, and there's no changes in the analysis. We're going to be looking at support at 1042 and resistance at 1107 here on that, 1107. Now, with the move that we saw from Friday and from follow through on Monday, we have a interim target of 1054. Okay, just seeing some notes from some people. So it's going to be resistance at 1107. Smooths are still making a kind of run up here. Here's that level that I talked about, that 3104.05-ish. Keep an eye on that.
Energy news. Oman oil minister says the recommendation that Omani delegation is taken to Vienna is to expand oil production cuts till the end.
And let me just cut down the
squawk. The recommendation they are taking to the Vienna is to expand oil production cuts till end of 2020.
Okay, just need to turn down the squawk. Key area right here, as I mentioned, this 04-ish area here. So we'll see whether the market, but once again, the news says that they're pretty close to a deal. The deal could come off before December 15th, and they're just trying to talk about the reduction in tariffs, tariff relief. So anyway, the euro is going to be steady. No changes here. 1107 is resistance. 1042 is support. Let's go and move into the cable. So looking at cable, bear with me. Got my hands full right now. Trying to monitor the market, possibly trade, trying to do this, so bear with me. Yeah, so we're actually pushing up higher now, 3106.5. So cable closed above the pivot of 2980. The pair has a potential to 3148 with immediate resistance at 3050. Support is now 2911. Well, we've already hit this 3050. So if we're looking at resistance here, bear with me. Gently weakening a bit here with. Okay, so resistance, we are looking potentially for the next move up here to 3114, but for resistance at this point now is going to come in at 3093. So it's going to be 3093 coming off of this area right in here. It's going to be 3093. Bear with me. Hold on a moment. And let's see for support. It's going to be back to the pivot, which is 2980. 2980. Let's go and move in now to the Aussie dollar. Now, we did go and see a good little dip back here in the Aussie dollar on that weak data. So looking out for support, one moment. So instead of the Aussie close about 68.31, allowing for potential of 69.14. Support is 68.08, but let's see here. We've already taken a pretty good little dip already. Yeah, it's going to be 68.08, 68.08, which is what we've got already here. And on the upside, I guess above the day's highs, let's say 68, 68, 68. So 68, 68. right there, 68, 68. Let's go move into the Kiwi. So the Kiwi is still maintaining its bid overall. It hasn't pared back the way the Aussie has, although it's a bit trapped within a very tight range right now. But unlike the Aussie, it hasn't pared back. See, support's going to be. I don't want to put it at that level, the 64.93. I think that's a little bit too rich. Let's go with 64.58 on the downside. We had 64.52, so I tell you what, let's leave it at that. And the upside we had was 65.54, and that's going to remain the same. So on the downside, we've got 64.52, and on the upside, 65.54 here on the Kiwi. See that a little bit clear right there. Let's go and move into the dollar CAD. Bear with me. Well, no change here in the dollar CAD. You can see we're rather a bit restrained here. We've made the move initially, but to get things turned around, but we've kind of given that back here. So really no significant move that I can say here. Let's see here, also the resistance for the dollar CAD, it's going to still remain 33.36 on this upside. And on the downside, we're looking at 32.69. 32.69. Just scalped out a little bit of this S&P, and I'm not going to do anymore. This is just too much at this point. Trying to do too many things and look at too many screens. So let's go on and move on now to the dollar peso. Tell you what, the spoons are still holding up pretty good. We're at 31.05. I mean, as I mentioned, I said that 4 was key, and then we made another run up there. We got up to what, around almost 7, I think it was, or anyway, caught some of this on the way back, but it's holding up really well. Yeah, we made it up to 7. It's holding up really well. Thought we might even dip back maybe quickly to 31.02, but we're still holding. Not that we can't, but it's holding these gains rather well. So moving on to the peso, no changes here in the peso. The peso's still mired in this, I wouldn't say mired, but we've been, 1962 has really been keeping a ceiling on this peso at 1962, and the downside, and that's going to remain our resistance. If we get past that, we get up to 1982, but for right now, support is 1942, so no changes in the peso. 1942 on the downside, 1962 on the upside. So, a moment. Man, you know what? I bet that move must have squeezed out and knocked out a lot of people. Doggone, I bet it sure did. I'm talking about this move in the S&Ps. I'm talking about for those that may have, you know what? Well, I'll tell you what. I saw that there was a lot of fun buying yesterday, but I mean, we already had come down to that 30.74 and that held. I'm talking about the SPOOs. I'm just wondering if, I mean, that would have been a pretty nasty move for some people, though, anyway. We saw gold come off quite a bit. Yeah, we sure have. We actually pretty nice run up here in gold, but we've already come off $10 to 14.80. Let's go on and move on now to the dollar yen. So, you know, there's the pivot. We've already talked about that at the beginning of the show. And the analysis from the weekend, because we closed above the pivot, was if we got a daily close below the pivot of 927, then we're going to be, you know, our initial target will be 851. We got 851 yesterday. This morning, the low was, 42? And obviously, we popped up rather quickly on this China phase one potential deal. So, that being said, let's take a look what our resistance is going to be on this. We actually did the analysis overnight. I think we were looking for 93, and I'm going to stay with that, which is going to be 893 on the upside for dollar yen. These booze are really holding up pretty good. I would have thought we'd have made a dip back down to 02 or something. On the downside, because of this China phase one deal headline that came out, I think we have to keep that 851 now. Even though today the move got down as low as 841, our target for the week, well, not for the week, but our interim target was 851, and we got there. I was just thinking about, man, I wonder if sure hope some people use these stops. I'll tell you what, as soon as I put a price in, I make sure I put in a stop when I'm trading these SPOOs, because good example, the way this market just got run over. Let's see, let's go on to the dollar index. But, you know, the thing was that we got to good lows yesterday, so this market can still move higher. The next key level on the SPOOs, not key level, but will be 31.12, and after that, maybe around 31.17 or 18. Anyway, let's go and move into the cash dollar index. So looking at the cash dollar index, we did get a daily close below 97.79. Obviously, this China news thing is going to, you know, mess things around. But my take was if we got a daily close below 97.79, that it opened the door for a move to 97.20, and I'm going to stick with that. So, but we had interim support, and let me go to that. I think the interim support was 97.48. So you can see the analysis. The Asian analysis is on the website. So yeah, with minor support at 97.48. So we'll hold that for the 97.48. Although we're looking for eventual move to 97.20, but things may have got turned around now. Bear with me. So it's 97.48 on the downside. Upside we have for 98.11, and actually we put the resistance at 98.02. We'll stick with that. And with that, we'll move into the cross rates. It's been a busy morning. Okay, we've got UK data coming out. Services PMI came in at 49.3, better number. And so we've taken a bit of a pause here in the Kiwi yen right here. But with that, we're going to still keep things in check. We had 71.45. That worked out pretty nice yesterday. 71.45. You can see it kept this market in check. So we're going to stay with that. And on the downside, we'll go with the levels you see there, which is 70.48. Go move into the euro yen. Well, we kind of bopped our heads up a little bit higher, and now we're kind of giving back these gains here. And that's actually where they, if you look at the lines coming across these bodies right here, that's well, actually it came in right there and held it. They didn't quite get there, but almost did, which is 21.10, and that's going to be the resistance, 21.10. We actually had 20.89 yesterday, which has kept the market in check, but which did keep it in check. So I guess we're going to keep the 20.89 because we're even sub 121, but support. We had this 20.32. We've actually already gone below that. But I like, you see right here, coming across here, right where we, I still like this area holding right there, which is going to go with 1993. Who's acting a little bit tired. Interesting though, NASDAQ is still fairly weak. Rather interesting. Let's go move into Euro odd. Well, it just looks like a mixed bag with this Euro odd. The prior week, Euro and the Aussie were trying to take turns trying to see who could be the weaker. Well, support you can see coming in here, right across. You can see that these touches coming right across there. And that's actually what we visited to yesterday. And that's going to be the support, which is 61.46. NASDAQ continued to drift lower, and it's pulling the S&Ps down just a bit. We're 3102.75 on the S&Ps. I thought we would have actually hit that real quick, and it did not take place. But I was so fortunate to get out with a couple of nickels. On the upside, right above that body touch, which is going to be 62.93 right there. So that's going to be the resistance, 62.93. Well, we're already 31.0175. 62.93 on the upside. And let's go into Euro Kiwi. So we're still making that trek down here to 69.42. You can see that as the Kiwi has continued to strengthen. And there's no need to change that. That's still going to remain the same. And then on the upside, this we had the 71. It should have been unmarked at the 70.31, but it's actually should be 71.31. But even that seems a bit of a stretch. Yeah, it's going to be 70.84. A little bit tight, but we're going to put for 70.84. Let's go move into the ASEAN. Well, we made this run up here, and then we have like a little bit of a gravestone doji, but we're kind of holding tight within a very tight range. But then that's what the ASEAN's been doing for about the last nearly 2 weeks. You can see here we were just dead in the water. Resistance is going to be 74.73. We actually had before 74.95, got it down to 74.73. We'll tighten it up a bit. With support coming in, with the Aussie weakening, we're actually going to go in we're going to go right with that trend line, and it's going to be 73.75. And let's go move into the guppy. Well, we're still continuing to push a little bit higher here. Actually, 41.82 still remains resistance level. It's holding it in check, despite what we've seen, sterling pairs moving higher. It's still keeping this in check. So that's going to remain the same here. There's support right there. Call it 40.74. which is what we already had before. We actually had that from yesterday. So no changes. And lastly, we finish up with Sterling Odd. Well, we got that close above 90.58, then we gave it up. Now we reclaimed it. We do have some resistance coming in right there. And that's going to be the resistance here, which is 91.56. But we do expect, I mean, if we can, let's say, put it this way, if we can have two consecutive closes above 91.58, two consecutive, it does once again open up the door for a move to 94.07. That's what I'm looking for. Support, it's going to be right there across these body touches. 89.29. I'm just saving the bias chart. And with that, let's go on and move into the other markets. So we have seen the spruce pull back a bit here. We're actually trading at we just 30.99.25 now. So we have gone and slid back. I didn't want to hang on too long. I thought that we may have seen that pullback much faster, and we hung around that 31.05 for a while. And with this headline, I wasn't sure how far they would take it up. Although it already had a pretty good little run, but I didn't want to stick around. The way it was hanging on, I was holding that right around that 31.05 fairly well. I was a bit surprised. I thought we would have, when we rallied back, I thought we would have seen this move now transpire rather quickly, and it didn't. But now we're kind of giving back a little bit here. See, we've also seen gold go and pull back a decent amount here, at least in the futures. We saw a quick $10 fall, and actually even stretched it out from the highs to about nearly a $14 fall from the highs on the Fed futures. Made it down to about almost 14.78. We're currently now at 14.82, so we've kind of moved back up a little bit higher. So a little bit of resistance here at on the futures at 14.82, a little bit. Bonds obviously must have seen a pretty good little fall too. Bonds fell all the way down. I was looking at the SPOOs. In some ways, it's better to trade the bonds than the SPOOs. So I had actually scalped a little bit yesterday in the bonds, but I just noticed just now. I mean, we got just below a key level. Now, like I said, I've got just the yields here, and that's on the 10-year yields, since everybody likes to focus on that. Although me myself, I like trading the 30-year bond, but we did go on and get down to 59.12 or 59.20. And oil, well, I haven't paid that much attention to oil. I have not liked the way this market is traded at all. Look over there. We run over there. We run the stops above here. Look at this. Then we come back down. Looks like the market's going to fail. Then we just start marching higher. Now, of course, obviously, this move here right now has a lot to do with, this headline. But I'm just saying is this, and look how quiet it's been. Look, after this big fall, then we just go gently higher, a little bit higher, just keep pushing a little bit higher, a little bit higher. And it's not like as if these are 15-minute bars. This is 2 hours. You look at that. And then now we finally start to break, but there's no real follow through. Now you start to go back up and you start going back to the direction that they just previously failed from. You see what I'm saying? So I don't like the way that this market's been trading for about the last 3 weeks. I haven't done anything with it. Getting back to FX, you're just kind of holding its own here. We'll see. Once again, the headline is going to impact some pairs in a sense. We'll see how that all goes and plays out. Dollar index now is recovered and doing a little bit better here, but we shall see how that goes and plays out. Obviously, the big movers right now are going to be in the equities markets and also to a certain extent in the bonds too. But that's all we have for today. Good luck. We'll see you in the chat room and later on the FX Daily Roundup.